Hey guys, in today's video, we're going to talk about why most traders fail. And you know what? This time, I've got some hard evidence for you. Hey traders, Akil Stokes here, Chief Currency Analyst and Head Trading Coach over at TradingPower.com, and welcome back to another Forex Weekend Review video. Before we get started today, I want to give you guys a big thank you for all of the support that you've shown. As you know, if you've been following me for a while, I've made it my goal to reach 25,000 subscribers by the end of the year. And well, I was looking back at how the YouTube channel has grown over the last few years, and man, we've just come a long way, and that is all because of you guys. Yes, I continue to put out good content, but without you guys liking, sharing it, and getting the word out there, and leaving great comments, by the way, there's no way I could have grown this channel this much. So I want to say I appreciate it, and I hope that you guys keep it up. And for you guys that are new, if this is your first time watching, if you like what you hear on this video, I would hope that you guys do the same. Just again, a simple like, a simple share with one other trader does so much for this channel and so much for me reaching my goals. Now, today I want to talk about a common subject. Why do most traders fail? And this is something that we've discussed before. This is something that we discuss almost every day in the live room and in the syndicate. But what's different is today I want to share with you some stats that I got from a report. Now, this report was written by David Rodriguez, and this is a few years old. It was back in 2011. And what they did was they took data from FXCM. FXCM is the biggest Forex broker, and they looked at about 12 million trades, I think from 2009 to 2010. And when they looked at that trades, they broke it down into a few categories. And one of the first categories they broke it down into was win percentage. What was the win percentage of the average trader? And this is institutional traders all the way down to the people that start up with a $1,000 account just to play around. And well, you'll probably be surprised to hear that. Well, the average win percentage for these traders was above 50%. Looking at my data right here, the smallest one was Aussie yen at about 49%, going all the way up to Aussie New Zealand, which was 71% correct. So I'm not the best at math. I told my live room members this morning, I've got two hands, I've got 2 feet, I got, 5 fingers on each hand and 5 toes on each foot. So anything after adding to 20, I get lost, but it's pretty simple to put 2 and 2 together here. If the average trader is winning more than 50% of their trades, yet we all hear the stories about how 90+% of traders fail, and that was, backed up by this report as well. Well, what's going on? What do you guys think? Again, traders are hitting a win percentage. They're winning over 50% of their trades, but still losing money. Well, I think it's pretty obvious. It means that when they lose, they are losing so much more than what they earn when they win. And this is something called risk reward. We talk about risk reward ratio a lot with our training course clients. And that is the most important thing. All you need is a system that can win 50% of the time. And if you have a consistent risk reward that's over 1-to-1, you will make money, assuming you can execute that plan consistently in the market time over time. And that's the tough part, is the trading psychology. Again, it's not the system. You don't think all of these traders are trading the same system, do you? No, it's not the system. It's trading psychology, risk reward. They're letting their losers ride, and they're taking their wins too early. And today in the live room, we had a great example. I went on a great rant as an example of that. So check out this footage. And then when we come back, I'll show you how to do it the right way. Again, the pros and cons, I'll go over one more time. You're sitting here and you're like 20 minutes. I can read over my plan millions and millions of times if you're a fast reader. Millions and millions of times just to make sure I'm correct. Every little detail, every little word, I'm really correct. That's the pro. You have plenty of time to review and make sure you're doing things the right way. The downside? You're sitting here and you know you're watching this candle, right? We would love to get up. Rick says 20 minutes of cardio. We would love to get 20 minutes of cardio and get some Kempo, start punching some things, right? But you know you're sitting here watching it. You're watching it. And as you watch this green candle, you're like, oh, no, 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 no. Reward is getting sucked up. Oh, no, 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 no. Risk is getting longer. And then what do we all say? I'm going to miss the trade, right? Give me a yes if you guys have been there. I'm going to miss the trade. The market's running away without me. No. No. And then what do we do? What do we do after that? We enter. We buy. We buy it right here, right? And then what happens? We get a candle like that. This gets sucked down. It turns into a red candle. Aaliyah's rule said what? I need a bullish close to enter this trade, right? She needs a bullish close. The candle closes in the red. Now she's involved in a trade that she's not supposed to be in, right? What do we do now? Now you're involved in a trade that you're not supposed to be in. What do most traders do? Not what you guys, I hold you guys to a higher standard. You guys have been here in the live room getting your education on for a long time. Many of you guys have been through the training course. You guys are seasoned vets. You guys know what to do. What do most newer traders do? They let it run, right? They say, you know what? It's going to come back, right? Market does this. It's going to come back. It's going to come back, right? It's going to reverse soon. It's going to come back. It's good. I'm almost stopped out, but look, we got structure down here. This is probably a better level of structure. Let's move these stops down some more. It's gonna reverse. Let's hold it. 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 Well, look at that structure support. This is probably gonna hold. This is where that bounce is gonna come. We've got a 1618 Fibonacci inversion down there. Oh man, let's get underneath that. Let's get underneath that for this hold. All right. Oh, wow, Orville, let's double down. And you end up taking, not only are you involved in a bad trade, but you've taken a much bigger risk than you're supposed to, right? This is what kills traders. Again, I'm doing this in my weekend review later. I've got the graphs to show you. We talked about earlier. I've got the charts to show you. Somehow the majority of traders tend to win over 50% of the time. That seems incredible. But they're losing money. This is how. How many of you guys have done this before? Give me a yes. I'll be the first one to type in a yes. Hell yeah. Yes, sir. Hell yeah. And of course, now that we've been through that situation, what should we be doing in this trade? If we enter right here, if we're based off emotions, we see that the candle doesn't give us the right close, what should we do immediately? Get out, right? Get out. Maybe we lose 12 pips, right? 12 pips is a lot better than losing, what, 85 pips? You saved yourself 70 pips. You saved yourself maybe 3-4 winning trades. What's the 60-minute time frame? Maybe 2 or 3 winning trades. That's the secret, guys. That's the secret. But no matter what we say, people don't want to hear it. All right, now before we get into looking at some charts, I want to ask you guys a question and be honest with me. How many of you guys have experienced that before? Do me a favor. If you've ever been in that predicament where you find yourself entering a trade that you're not supposed to and then it goes against you and you're hoping and praying that it turns around and you're rooting for it, do me a favor. Just type me or I have in the comment section below. one of the things that I want to develop here on this YouTube channel is a great community of traders, a place where other traders can come and they're not really attacked by the trolls. They're not really attacked by the people bragging about, hey, I made $5 million in a week. I want them to see real traders and have that as a place they can feel comfortable. So if that has ever been you, just do me a favor and below in the comment section of this YouTube video, just type in, yep, I've been there, me, done that, all types of stuff like that. So that was a good example of how traders can get themselves into trouble. And for you guys that ask, well, Akil, how do you mess up your risk reward if it's set at the beginning? Again, trading psychology, it's all right there. That's why support is one of the biggest things we offer here at Trade Empowered. And if you guys like that rant, join me for the live room. We have a free 1 week trial. Come in. It's one of the best live rooms you've ever been in. Trust me, we get down and do some trading, but we like to have a lot of fun and have some good conversations as well. We're talking about Main Street Alpha today and how after you've become a consistently profitable trader, how you can take your business to the next level by investing other people's money. It's pretty cool. But what I want to show you now is a trade opportunity and an example of how I would set up a risk reward. That way I'm consistently taking bigger wins than my losses. But before I get into that live chart, I want to show you kind of the background of this trade. It was a trade that I showed to my syndicate members on Wednesday on the pound dollar. There wasn't much going on Wednesday. There might have been Tuesday. Anyway, earlier this week, there wasn't much going on earlier this week. So I shot them a projection. I said, hey, there's not much going on, but here's what we can start predicting per pound dollar. This can potentially happen. So we want to be a step ahead of the market. So I'll show you a quick clip of that, and then I'll come back to a live chart and show you how exactly I would set up a risk reward on that trade to put me in the best position to be consistently profitable over time. I just want to show you the different possibilities that are out there in the market. Now, if you're a trend continuation trader, obviously we need a higher high, higher close first, but I want to take you through the process that I go through to kind of predict where this trend continuation setup might go to. And I'm looking for my daily chart. Here we go. Looking at my daily chart, I always want to identify structure on my daily chart. So if I zoom out, I see that we have a structure level right around here, right around 145.64. So let's go ahead and put this on our chart up here. 145, right? 145.64. Yep, 145.64. Boom. Right around here is structure on the daily. Let's delete this. Now, I ask myself, and again, one of the things that we go over with our clients is think like the other trader. So think about what would you, if you're projecting the market to go up, where are we likely to go up to? And you start making a prediction. And an easy way to make a prediction is by putting on what? A harmonic move. Well, if the market is moving harmonically, will look like an ABCD pattern, and it is, then price action will come up here, 144.45. You can draw a Fibonacci extension there as well. Again, the same technique you would use to find that counter trend trading opportunity, you can use to kind of predict where price action is going to come to next. So this may be our next stopping point right at structure. Now, this is getting a little ahead of the market, but if we were to put in another harmonic move, boom, and then and in the form of a retracement, I should say. Again, we can move harmonically, not with just extensions, but retracements as well. If we were to put in a harmonic move with a retracement, that would bring us down there. And one more harmonic move would put us, lo and behold, bang, right at that structure level. Looks like another 127 extension. Now, I know this seems out of the norm, like, oh, there's no way it can do this. You would be surprised. Play a game, put some analysis on the chart, predict it, and see how closely price action follows through. And you'd be surprised at how many times it actually does move harmonically and follow through. The point is, I'm setting myself up for potential situations. I know that if price action, if I'm looking for a trend continuation opportunity, say up here, I know exactly where I would be looking for first targets at. Boom, right down here. Whether I'm entering here or I'm entering on some type of pullback down to here. If I'm entering, if I'm not aggressive enough to hit it up here and I need to see a breaking close and another outside return, boom, I know exactly where I can get involved and exactly where I should be shooting for targets at in advance. And the key is we want to have our analysis one step ahead of the markets. That way we're not rushing and going crazy when that situation does come. So All right, so let's take a look at the pound dollar. Let's get out here on a 4-hour time frame for the cable. And again, remember the levels we talked about in our video. You see, I still have a little bit of my notes on for the live room, but we were looking at. Let me just see if I remember here. My memory is so short, guys. So many pairs. We're looking at basically that 145.60s level. Let's call it 145.50s, projecting a few harmonic moves up to this level. And you can see that price action has been ebbing and flowing over the last couple of days. We've got starting point. This is week 1 for you guys that are in a 12-week transformation. If you guys aren't and you're unsure of how to read a price chart, make sure you check out our Into the Gray trading training. It's a 3-hour free training session over on our website, tradingpower.com. But let's just walk through this. We got starting point to swing high, new structure high, right? Outside return. Right? We actually retest previous structure highs here. We consolidate a little bit, and then we get a higher high, higher close. Higher high, higher close means that we should predict what? For you guys familiar with IPDE, identify, predict, decide, execute. Right? We should project the continuation higher. Again, same thing we did. I just showed you in the syndicate video. Now, let's go down to a lower time frame, our hourly chart, and let's see how we can potentially set up this trade. So if we're aiming for a move to this 145.50s level, right? If we're aiming for up here, even if we're aiming a little shorter, but we'll use this because this was the ultimate projection that we had. What we would wait for is a pullback. We wait for a retracement back in the previous structure. You have structure right here. You have structure down here as well. Now, we can do examples for both of these, but I just want to show you what the risk reward would look like. Let's say we get involved right here at the 143 even handle, psychological number. We have 2 choices on where to put stops. We can put stop losses right here below structure. Let's make this red for stop. Or let's even say we take this, you're a trader that doesn't mind having a large stop loss on, and you want to put stops below this previous swing low. This would be the safer area to put stops on, but a lot of it depends on what type of entry you decide to take. Are you aggressive? Are you conservative? You can certainly reduce your risk or I guess enlarge your risk by that way. Now, we're shooting for a move back up again to that 145.50 level. We can even, let's see what we have here. Again, I think I did some more analysis during the break, but let's even say we're going to 145 flat. Look at my potential reward. Boom. Yep, let's make this a little compared to my potential risk. So again, in blue, we have our potential rewards. In red, we have our potential risk. Now, let me ask you guys a question, and this is a very conservative mark. What do you guys see here? What do you guys notice? What is larger? Is it our risk? Is it our reward? Right? 100 out of 100 traders should be able to agree with this. Our potential reward well outweighs our potential risk. Even if we take this bigger one right here, we're looking at 1, 2, almost 2.5 to 1 risk reward. That means we can lose on this trade twice. And if we win once, we're still going to be in profit, right? That's a 33.3% win percentage. Now, what did I just tell you about the article? The average trader is 50%. So on average, you're going to win 1 out of every 2 of these type of trades. Now, I'm not saying, again, this is not, I'm not saying to trade this right now. These are just ideas and examples. Don't go out there and buy it at this level. Follow what's in your trading plan. But I want to show you an example of how you want to set up your risk reward to give you that edge over the market. Even if you're taking a more conservative approach, even if you're taking targets at a retest of previous structure highs. Let's say you're a trend continuation trader and not a trend following trader. Look at this, still more than 1 to 1. So as long as you're a 50% trader, you are still going to make profit if you're taking consistent setups like that. And this is how we want to break down our trading. We want to put ourselves in the position where we don't need a really, really big win percentage. You guys know me. My average win percentage over time has been about 55%. Right? I am not a high percentage winning trader. I win about 55% of the time. Jason Stapleton, I believe he wins about 60% of the time. So it's not anything outstanding. You're not looking at 80, 90% wins. We're looking at a modest win percentage. So what makes the difference? How come we've been able to be consistently profitable for all these years? Well, because we're combining that win percentage that's above 50% with a plus risk reward, meaning that our wins are outweighing our losses. And when you can do that, that's all you need. That's all you need to have a profitable system, right? That's all you need to have a system that has a positive expectancy. So hope you guys enjoyed that example. I don't know where I'm going with this. If I want to go anywhere else, I do these videos on the fly, but yeah, I guess that's it for this week. Probably the worst ending to a video ever, but I mean, that's the point. This is the point I wanted to get across, guys. It's, you set yourself up with a good risk reward, but then you got to follow it. You got to follow it. You can't let yourself make those psychological mistakes. And that's the problem that most traders make. They set this up fine, but once the money is actually on the table, they start making mistakes like I showed you in the clip earlier. So for you guys that are hanging around for a little bit, I'm going to share a very inspirational pep talk that Jason Stapleton did in Thursday's War Room meeting. That's the weekly, or not the weekly, the daily meeting that we have at 8:30 New York time every morning to kind of get you prepped for the trading day. So hang tight and watch that. For the rest of you guys, if you're heading out, thank you again for supporting. Help me get to 25,000 subscribers. So every time you like it, you share it, you comment, that's a big help for me. And well, I'll see you next time. Until then, plan your trade, trade your plan. Great luck in the markets, guys.
This has been this job, trading, educating, has been maybe the best thing that's ever happened to me, just because my life has radically changed. And I hope that you guys are looking out on the horizon and forgetting the short-term struggles and trials that you're dealing with right now, and understanding that destination determines direction. And that when you realize where it is that you want to end up, it makes the journey more palatable. You can see what the end looks like, and more importantly, you know how you need to be moving and how you need to be pursuing your career and your goals, whether it be personal or professional. We're talking about trading here and about lifestyle, rather than, for example, your relationships with your wife or your family, and those are very important too. One of the things that I taught a class on entrepreneurship a couple of years ago. And one of the things that is very difficult for people to understand is short-term struggle for long-term benefit. People tend to only look in the short term, and traders only look in the short term too. They tend to look at this trade or the last week worth of trading or even the last month worth of trading, and they base that off of whether or not it's worthwhile to continue in your current pursuit. And one of the things I try to explain to people is, let's say that one of your long-term goals is to be able to spend more time with your family, right? But in order to do that, you have to work for the next couple of years, 12, 18 hours a day, in order to get to a point where you could potentially be able to show up and be home when your kids are home, and not have to work and not have to show up at 6 and spend an hour with them and then go to bed. Or maybe you're the type of guy who wants to play golf all day. But in order to get to a point where you can play golf all day, you got to spend the next 5 years just like breaking your back in order to get there. A lot of people will look at that and say, well, that's just, I mean, there's no guarantees, so why would I do the work? And if there's no guarantee of success, and that's really the wrong way to look at it. What I try to explain to these young budding entrepreneurs, and some of them weren't all that old, some of them weren't all that young, some of them were pretty old. I said, listen, a lot of people don't want to have success more than they want to, you fill in the blank, more than they want their downtime. Right? More than they want to see their kids, more than they want to, be able to eat out whenever they want to, right? A lot of people don't want to make choices. It's not really sacrifices, but to make choices in the short term that are painful in order to have a long-lasting benefit. And I said, that's, if you're not willing to do that, quit now. Because you're never going to be successful if you're not willing to take that short-term pain for a very long-term benefit. It doesn't work that way. Everything that we do, everything that I do with this business is money first, is money going out first and maybe coming back second. Everything we do in trading is the same way. When you put on a trade, you're risking money first with the hope that you will make money back over time. You know, not everything that we do here is a massive success. Most of it is because we're pretty awesome. But there are times when we have devastating defeats inside the company, just like we have defeats in trading. But that doesn't deter me from my long-term goals. And it doesn't deter me from doing the things that I think are going to provide me the life and the lifestyle that I want. You see, when I first started this company, I was working night and day. I mean, I would get up at 4:30 in the morning. I would drive all the way into work. I would work from basically what was essentially 5 o'clock in the morning, because it took me about a half hour to drive to work, from 5 in the morning until 3 in the afternoon. Then I would go home so I could beat traffic, so that I could then go down into my basement and work more, because all of the stuff I did in the morning, my work wasn't done at 3. It was just I wanted to beat the traffic so I didn't have to spend an hour in traffic on my way out of the city. And then I would get home and I would work, and then I would take a break for dinner. And while I'm sitting there with the family, my nose is in a computer and my wife's going crazy, and I'm watching the markets and trying to create course material, not getting to spend much time with my kids. And that went on for years, until I find where we're at now. And anybody who saw this early on can vouch for it, Darren most specifically. Now I'm in a position where normally I'm home before my kids get home from school. And I still work in the evenings, but it's after my kids go to bed. And it's much more relaxed because I've done all of the hard work to build Trade Empowered to a place where it functions on its own, or lots of it functions on its own. And I've hired good people like Darren and Charles, who come in every day and who take a big load of the burden that I was bearing off of my shoulders. And that's allowed us to grow and continue to provide great quality content and education to you guys. And this entire discussion that I'm having with you today, and we are going to get to the charts, just bear with me, is that you've got to put yourself in a position as a trader that you're looking at the destination and you're not focusing on this particular trade or that particular trade. You've got to look at it and say, listen, I'm in this thing for the long haul. And understand that if you're not willing to sacrifice, and I don't like to use the term sacrifice, but I'm going to use it here because it makes sense. If you're not willing to sacrifice a little pleasure now for a whole lot later, then you're never going to be successful. If you're not willing to work your 40 or 50 hours a week and then come home and put in another 10 or 15 hours on your trading business, guys, forget about it. You guys remember the story I told at the Cracking the Code / Trade Secrets event that I did? And we talked about the guys at SMB Capital and what they do every day. Guys, you're going to have to hustle to succeed at this. And I'd love to come in here and blow sunshine up your tailpipe and tell you about how easy it is and how you could just follow my system and you'll make millions. That just ain't the truth, brother. It just isn't the truth. And so as we look out at the market today, what we've been getting is a whole lot of start and a very little bit of follow through. But this is the trade from yesterday, New Zealand dollar. This thing actually